Well, Bob and Hippolyte will be really brief because you really do have two stars coming up next, and all of you know them. But I've had the pleasure of knowing both of them for a lot of years, working with them and for one of them once. And I think what's so interesting is two organizations that have, in many of our minds, pasts that we might have compartmentalized. We would have thought of Accion, and you would have said just microfinance. And it was so important, a leader in microfinance, an organization that Citi we began working with almost 50 years ago. And it has grown, as the sector has, into really a leader beyond that, into what we'd really think of as financial inclusion. And many of its institutions, its members and its banks have as well. And they're here, some of them are here today. I just saw Kurt somewhere in the audience too, from Bolivia. And then MasterCard. And Ajay comes out of a banking background, I mean, before that, consumer products background. But when you think of MasterCard, we think of the debit card or the credit card that most of us have in our wallet, at least one of them, would hopefully be a MasterCard. And the other one, our other sponsor, for sure. And all of our institutions should be issuing both, at least, if not three of them now. I'm a little confused, but I know which one gives me the best points or miles. But when we really also found that the cards, the whole platform, the learning that the card system had created, it's going to be critical for expanding exponentially the number of people we reach. So I think it goes beyond plastic, it goes beyond cards, it's chips, it's going to connect to mobile, but it truly also provides that grid, as I keep using the term, that connects the banking system and beyond now. So I think Ajay Banga of MasterCard, the CEO, and Michael Schlein, the CEO of Accion, are going to have their fireside chat. And then we'll come back with a very important panel of some of our colleagues from Africa.
It's actually got a pretty far with it.
If this gets a little too warm, just let me know. We can turn it down a little bit. The comfy chairs, that's how you know it's a fireside chat. As Bob described, I've actually had the pleasure, I've known Ajay for nearly 15 years. And the one thing I'll add to that introduction was, this is a guy who really gets it. We were both at one stage, and he's gotten it for a long time. We were both on the Citi Foundation board, and I remember very clearly, with some passion and even a little table thumping, you were arguing that we should donate what was $100 million a year at the time to women and financial empowerment. And this was about a decade ago. So this guy has really gotten it. And now when you see him in charge of MasterCard, you see and we will hear some of the exciting things that he's really doing. So let me start off with a question. You were in Soweto. I want to bring it to a real client. Tell us about Hildy and the impact of receiving benefits electronically instead of in cash.
Sure. So it's very easy to be committed to women when you have a household of 3 women, my wife and 2 daughters, and I'm outnumbered, so I'm very committed to women. It's a survival thing. But this thing about Hilda Hilda was her name, in South Africa, actually the real issue was that we were trying to find a way to reach South Africans who receive Social Security payments in a way that goes beyond the cash that they were getting currently. So we were not replacing or increasing what they were receiving, it's just the way they were getting it. And the way we got to the South African Social Security Agency, and with a partner and with a bank, we kind of went to them and said, if we gave everybody a card with a chip, it's called an M-Chip 4, which is a proprietary chip, but you don't have to use a proprietary chip. You could use one of the other institutions' chips that Bob Anibali was referring to, whose name I'm kind of struggling to take, but you know what I mean. And so if you use that chip, and you could put your biometrics on it and even your voice recognition on it, then you can transfer that entire Social Security payment onto the card. They can take the card, go to a cash point, a bit like we were discussing today with Bikas, and take out the cash. Or alternatively, over time, as you build acceptance, they can actually use the card to buy. Hilda was the lady I met. And I went to her tin hut in Soweto. She's 70-something years old. She worked till she was 50 with a young white couple who left South Africa and went away, and she got fired by the replacements who came, and essentially went from having a stable life inside a house to being homeless. And ended up inside living with a cousin's son in a tin shack in Soweto. And this cousin's son used to ill-treat her to get access to the money that she used to receive. And she basically said to me that with a card, he can't touch me any longer. And it's my money, and it's who I am, it's on my terms. I belong, I have an identity, and it's on my terms. That's the power of financial inclusion, that most people, I was telling somebody earlier today, there are 2.5 billion people without access to this financial services system. Half of them are, more than half are women, 40% are young people, more than half live in towns, not just rural, and more than half, or 40-50% of them have a job. It's just a casual job. They're people like us. The only difference is they weren't lucky enough to be us. And there's got to be a way to fix that.
Your description of Soweto, it's a bigger trend. India, Nigeria, South Africa, Bangladesh, Zimbabwe, the use of government-to-people payments to build out the payments platform. I guess my question is payments going to be the path toward financial inclusion? Yeah,
so I think that there are two parts there. One is why government to consumer payments, and two, why payments as the roadway. And I think if you take the first part, if you look at the average underbanked or unbanked individual around the world, now it varies by country, but the average, it's about 60% of the money that flows into them comes from some kind of job, some kind of corporate entity with which they have some relationship. But 10% comes from remittances, from relatives and so on. But 30% comes from governments. It's the single largest source of money coming in that you can actually get your arms around, if you can try and get your arms around the government. In the US, that's a little difficult these days. But if you sort of try and get your arms around it, as compared to thousands of corporates and millions of people sending money, this is one lump sum you can get at. And so that, combined with the fact that governments today are speaking very well and strongly about the idea of creating a cashless economy. I mean, cashless Nigeria is a slogan I heard for the first time in Abuja. And so you combine that with the fact that most companies like the ones we worked at Citibank or any of the other institutions here, including the institutions we're working in as partners in Nigeria, we're going to come up in a little while, they couldn't do what they did if the government were not their collaborator in some tangible way around knowing your customer and anti-money laundering. And so we just have got to find a way to get at those governments as the way to intervene in the flow of money. That's also the place, Michael, where 30 to 40% of the inward flow gets stolen by middlemen. And so if governments are spending $8 billion a year in the state of Punjab trying to buy, in India, trying to buy public distribution system wheat, and if 40% is going to somebody else, I mean, that's just obnoxious, and it needs to be fixed. And so you can fix it with electronic payments, because that middleman goes away. They actually get that 40% that they should be getting. Then the second part is why payments. And I think there are many hierarchy of needs, and people want insurance, people want credit, people want savings. But the fact is that what they deal with every day, which really makes them non-existent if they do not belong to the financial system, is the fact that cash comes into them. Cash, it's this mistaken impression that cash is the friend of the poor man. Cash is the friend of the rich man. Cash is the enemy of the poor man. Try hiring a car without a credit history or an identity. Try living in a hotel room. Try getting admission into a school, unless you're in certain states in the US. Try getting a mobile phone, unless you got to show identity. You need cash does not allow you to build an identity. Cash keeps you away from existing. And there are people, I'm not the only one saying this, there are people from different universities and schools and think tanks who are now talking about the same topic. But I mean, cash is a whole topic I can go on for a long time.
No, and
not cash, but cash.
I want to ask about you
These are good guys. They're on the right side.
You talked about corruption and leakage, and you talked about the importance of identity. Yeah. But speak a little bit more broadly of the cost of cash. It actually came up on the last panel as an unanswered question, and I thought you'd be perfect to answer that question.
How much time do we have?
Yeah, give us the short answer.
So there's this mistaken public dialogue. I call it a relatively uninformed dialogue that says that cash is free to society and that electronic commerce costs money, and therefore that's a more expensive way to do anything. And I think that's just an uninformed dialogue. Cash costs everybody in society. It costs a government between 0.5 and 1.5% of GDP to print it, secure it, and distribute it. And those studies are done by the Tufts School and Fletcher School and German universities and Canadian universities. So they're public data, and you can get them on many websites that it costs that much money. The second part is, and Governor Subbarao of the Reserve Bank of India is here somewhere, wonderful, wonderful human being. And if you listen to him talk about it, there's a cost there. Second part, when you have to, if you're a bank, you've got to pick up that cash from central locations and bring it to your branches. That's why the best company to buy shares in is of Brinks, which has armored trucks. Because every time you open a branch or an ATM point, Brinks has to transport the cash, and in that truck are always two guards. Why do you need two guards? Because if there's one, cash disappears. Cash is fungible, and so you need two guards. Then you bring it into your safe, and if you ever worked in a bank as a teller, you will find two people count the cash, two people put it in the safe, two people take it out for each shift, two people put it back, two people count the soiled note that the little old lady in a pink night dress brought in to change. It's an insane system that belongs 300 years ago, when there was a value to cash, when it was supported by a gold standard. It has no meaning in that form today. I'm not arguing against regulated forms of money interchange, which governments need to have. I believe in that, but why paper and cash? And then you've got further costs, illegal activity or tax evasion. I mean, Greece almost brought the Eurozone to its knees, and there's a study published by our old institution that said if every Greek paid the dues, taxes they were to pay, you would have had a budget surplus in Greece. And then you go further from there, and you look at countries like where I grew up, where, as Governor Subbarao will tell you, there are only a few people who pay taxes. Avoiding taxes is a blood sport. Yeah? You go to Russia and China, and I show you, tax compliance is not a way of life. And then you come to the worst-kept secret of cash, which is the cost of cross-border illegal activity. You know, drugs have been coming into the United States from certain countries for a long time. I mean, they don't come in exchange for a Citibank credit card payment. Yeah?
Right.
You know, it's just, this is nonsense. And therefore, cash has a very large cost to society. It has a cost to merchants, it has a cost to consumers, it has a cost to governments. We should find a way to do something about cash.
So, there you go, applause. So today, 85% of the world's transactions happen in cash, and 15% are electronic. Where do you see those numbers going in the next 5 or 10 years?
Actually, I don't see them changing adequately, because what's happening is inside the 85-15 is the developed world, which is, let's say the US is 50-50, and the Nordics are almost 95% electronic. But what's happening is because of the growth of personal consumption expenditure with the expansion of the middle class and urbanization in the developing world, that's growing faster than the developed world is in terms of PCE. And so while the mix is changing, unfortunately the use of cash in the developing world is much higher. So when you put the weighted average together, good old math, you end up back at 85. Now, will that change from 85 to 70 in the next 5-6 years? I don't think so. Will it go from 85 to 80? It will. But if companies like ours, and I said this in our company from the day I joined, this conversation is in our own self-interest as a profit-making enterprise. And the reason for that is it takes a lot of work to gain market share in the 15% that is currently electronic. But if I were to do nothing, just fog a mirror, which I do pretty often, and allow the 85 to become 84 and the 15 to become 16, I grow by 7% in revenue. 7% of revenue growth in this environment is a very attractive company. And so we just need to rethink what we're doing. And you certainly need to win share, because that's what allows me to fly to an event like this and to be a part of the sponsoring team here. But I think it's beyond that. It's about what can you do sensibly to grow the size of the pie in an intelligent, attractive way, and use technology and the empowerment of individuals to make that happen.
So this morning, you sent me an article knowing we were going to be on this panel that's in Bloomberg today about homeless people in Stockholm, you mentioned the Nordic countries, can now accept credit cards. Is this part of the trend?
Yeah, well, I didn't send it to you for that purpose, but I'm glad you...
It's a pretty interesting piece.
Actually, I have a slightly different description of the level of penetration of electronic payments in the Nordics. If you want to use a public toilet in the Nordics, which is actually pretty funny, you've got to text to a certain number. They text you back a code. You go to this public toilet, it has a text pad there. You enter the code, and when you go in, it hits your bank account. So I call that tap and go.
Tap and go. Excellent. 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 So
A little different from homeless Stockholm.
a cashless world, is a cashless world a financially inclusive world?
So I don't know that we have the answer on that yet. I think we'll figure it out as we go along. But my perspective is that cash is the friend, as I said, of the rich man. Look at it this way. Who avoids taxes? He or she who pays taxes. Who has enough money, well, he or she who should be paying taxes. You've got to be earning enough to do that. Who chooses to do those things is because you have a choice. If you're Hilda, you don't have a choice until this card came along. And now she had a choice on her terms. And so I believe that if you can get cash out of the system, you can enable people to have an identity. You can enable them to begin to at least receive the money that's coming into this identification, into this instrument, fingerprints in India, cards in South Africa and Nigeria, a phone somewhere else, whatever makes sense. And then you've got to work on getting them to be able to use that instrument, not just to go take out cash tomorrow morning, but to be able to use it to buy their potatoes and vegetables and onions and day-to-day stuff. And then once you get past that, that instrument then becomes a saving instrument too, because it's preloadable. All of a sudden, your payments instrument is also a savings instrument. And you can save for a rainy day, and you don't have to borrow from the village money lender, which is a bad way to go. And then once you get past that, you've really got to come to credit. And Michael, I saw outside on a board, you have these 5 different perspectives on what you're trying to do in Accion with financial inclusion. And if you look at the one about building credit history, that's key. And that's going to take a village, as you say, to get that done. And there are steps. And insurance, we were talking about insurance this morning. You know, most rural farmers in India, for example, actually don't own the land. They are being used as crop sharing. If they could find a way to get insurance, crop insurance, using their payment vehicle as well, think how powerful that is for that individual, given India's boom and bust cycle of drought and plenty. And in the Midwest of the US, when this drought happened, very few institutions were worried because crop insurance payments kicked in for those people. I just think there's a lot there. So we can start with payments, build, as Bob says, build the network grid, build the highways, but you're going to have to put rail cars and cars on the highways eventually.
There feels like a lot of momentum around financial inclusion. The Clinton Global Initiative put it on their agenda. The Davos World Economic Forum created a steering committee that you're chairing. This conference is happening. The World Bank president committed the World Bank to universal financial access by 2020. Why is all this happening now?
Well, I think that there's a confluence of circumstances. I mean, look, that's a big, hairy, audacious goal, and I have a lot of hair, so I can actually put that goal out there. I'm not sure the poor World Bank president has as much hair, but if you go forward from there, you get past all that, I think there's a confluence of circumstances. I think that if you look at the developing world and the developed world, but in the developing world, the growth of the middle class, the urbanization levels, you look at all that, you combine that with what millennials feel about using technology, where they don't have landlines, where they like the least amount of friction between shopping and receiving what they want, between seeking information and getting it. They don't, my 2 kids are my millennial focus group of 2, and they're a pain in the ass on this topic. And so when you sort of go forward in that discussion, I think there's a time and space right now that has all this technology, adaptability, the growth of urbanization, it's all there. And you combine that with the fact that governments are signing up for this cashless vision and for financial inclusion as something that they need to do to drive inclusive growth, failing which you have societal tensions that none of us can afford to even think about. Look, if you look at India, and it has 600 million young people. And everybody says that's a demographic dividend. And it is true if they get a job. It is true if they get education. It is true if they get health care. It is true if they get clean water. Subtract those four, and now you're looking at a demographic liability, not a demographic dividend. India recognizes that. They need to create 15 million jobs a year. That's a real number. You won't create that without manufacturing, infrastructure, and tourism, in the case of India. You won't create it without investing in all these things that are required to get people out of their circumstances. I just think inclusive growth is the only way that our society can be there tomorrow. So you don't look after I'm not even sure that jobs will come in the future the way they did in the past, given the technological revolution and what it's doing to productivity. And so I play golf once in a while, 10 times a year if I'm lucky. In the old days, you used to have those gadgets made by somebody that you pointed at a flag in the distance and it told you it's 120 yards. And then, of course, like a jerk, you hit 180 or 22, but you still use the gadget. Now you don't need that. There's an app on your iPhone. You go onto it, it costs 99 cents. You get, instead of 120, it'll tell you it's 119. It's pretty accurate for a hack like me. All those people who were making that gadget earlier, their jobs are gone. You've got somebody else designing an app in a garage in Silicon Valley. This is a different world with a different productivity. If young people don't get jobs, we won't be having these conferences with as much pleasure as we do today. So I just think it's the right time. We need to get inclusive growth wired into our DNA.
You touched on the role of governments. Maybe you could elaborate a little bit. What's the role of government, of country governments in creating a financially inclusive world?
Actually, I think it's moving beyond country governments in some ways. I think actually that as time's going by, the large urban agglomerations, which is more and more is happening, they're going to drive city by city responsibilities in this space as well. So it's an interesting time. But if you look at the large cities of the world and how more and more people are coming into those cities, it goes beyond federal governments into even local governments have got to be a part of it. But what role do governments play? Well, it's that, remember, they're the 30% originator of that cash. There's a lot of money going from them to individuals. If they can find a way to be more efficient and effective in the delivery of that money, then they save that money to put it to better use, while also making sure that the recipients actually get the money they were supposed to be getting. So I think they've got a huge role to play. They've got a role to play in the identification of citizens so that global companies with that standard, who are held to that standard, can actually do business with what is otherwise an unknown citizenry, exactly like in Nigeria. We could not have done what we're doing in Nigeria without the Nigerian government being visionary, thoughtful, and willing to lead from the front. We could not have got that done.
We have a minute before I'll turn it over to Bob to open it up for Q&A. What's the innovation that you're most excited about?
That people are actually talking about this. But in fact, to me, biometrics is a bigger one than the mobile system. I'll tell you why. Because a lot of the people who are financially disadvantaged also, unfortunately, happen to be illiterate. And, you know, if you go to a village in India and you try and get them to use a mobile phone, a woman, to use a mobile phone in that village. And by the way, the woman's the one who should get the money because she'll make sure the kid gets educated and actually has a decent meal. And so if you try to give it to her, it's very tough to get her to use a mobile phone in that sense if they're not completely literate. Numbers, pin pads on an ATM, but a fingerprint. That's yours and it's secure and it belongs to you and it's who you are. So short of cutting Hilda's thumb off, that jerk who's her cousin's son could no longer do this to her. So
there you go. Thank you. With that, let me turn it back to Bob.
Great, thanks. We have just a... We have just a few minutes, so I'm looking for like at least two, but very succinct, good questions while we have Ajay and Michael here before we go on to the next session.
Questions for Michael.
For Michael, okay, succinct for Michael, but really in depth for Ajay. Can you put up your hands? Sorry, we're out in the sun here. I can't we'll get the mic to you. There's a mic over here. Thank you. Okay, and then we'll go there next. Yeah.
Hi, a question for Mr. Banga. One question. We spoke about getting the cards to the people and the people using the cards. I would like for you to tell us what would be the strategy to ensure that the network where the people acquire their basket of goods is willing to accept the cards, because in my experience that has been the biggest hurdle, and how to drive the cost of using the card down. Thank you.
And we have one more, and then we'll let you both choose how to answer it. There's a lady over there.
Actually, my question is very much along the same lines. You touched a little bit about providing biometrics as an example of access to the cards and so on and so forth. So I'd be curious for you to hear a little bit about your investment to accessibility as a whole in regards to using those delivery channels.
Okay.
Thank you.
So, my first thing is that I'm not trying to boil the ocean here. I'm not trying to find a way to get everybody to get paid in a digital account. A card is just a form factor. It could be an account on a phone. It could be an account with your fingerprint. That's just a form factor. I'm not trying to find a way for them to be able to use that in every shop tomorrow to buy everything. I'm trying to first get into the money inflow so that the leakage that happens today between what governments think they're paying and what people are getting gets zapped. So that's the first thing I'm trying to do. After that, you've got to build the acceptance network so they don't just go out and take out cash from the nearest cash point or from a bank, and then they're back in the same cash economy, having benefited a little bit, like Hilda has, with an identity, but not enough to what she could do. That second step has got many different ways to it. So in India, we're talking about how every village shop has a cell phone. They don't have landlines. You could attach a dongle at a very low price to a cell phone which can read a fingerprint. If you're collecting the fingerprint at the time of collecting the unique ID, which is what India is doing very successfully right now, then in theory, if those bank accounts were opened or prepaid card accounts were opened or whatever is economically feasible in India were done, I could go as a farmer and buy my vegetables using my fingerprint. That's very different from having to install expensive cash acceptance machines. In South Africa, there's a private company called Blue Label. They've got a whole network that does lottery tickets, which unfortunately poor people tend to buy more than richer people do. And that's not the dirty little secret about the lottery business. But anyway, this is not about dirty little secrets. This is about getting cash to people. So if you look at that whole lottery machine, it's electronically connected. We've struck a deal with them to allow that electronically connected machine to accept the SASA card. All of a sudden, you're in many more shops than you ever used to be. And so my perspective on this is that you should first get the cash in to be intervened in. It will create an enormous amount of pull for us to have to find ways to get the acceptance to work. There are many creative ways to get that acceptance to work that don't rely only on traditional card acceptance machines. And that's how I think eventually you could get to a solution.
Great. Okay. Well, I'm going to say thank you. Thank you both. And please join me in thanking them for this session. Thank you very much. Okay, you too.